2 weeks ago I did a video on income taxes in America, and I kept seeing the same two questions pop up in the comments on Facebook and Reddit. Shameless plug to follow me on there. So I figured instead of writing the same response a dozen times or so, I could just make a follow-up video, so here it is. So the most common request for explanation had to do with what the difference between claiming 0 allowances and claiming 2 allowances actually look like. I said it a few times, but looking back on the video, I'm actually pretty shocked that I didn't show it. So let's bring back our two friends and take a look. Again, they both make the same amount. For simplicity's sake, let's say that they're making $250 a month. This guy claims 0 allowances on his W-4, so the government takes out around 20% from each paycheck, or around $50. This guy actually read his W-4, did the math, and claims 2, so the government only takes 10%, or $25. So as you can see right off the bat, this guy is taking home $25 more a month than his friend who just filled in 0. This happens every month for a year. Every month, the Enclave soldier takes home slightly more than his Brotherhood of Steel counterpart until we reach the end of the year. So now it's time for them to do their taxes. They both made the same amount, $3,000, so they both owe the same amount. We're dealing with made-up numbers here, so let's say that their effective tax rate is 12%, so they both owe $360. But they were both paying throughout the year with their withholdings. So this guy with his $50 a month paid $600 throughout the year, so he'll be receiving a $240 refund. This guy, on the other hand, with his $25 a month only paid $300 during the year, so he will owe the government an additional $60. This is usually where the person who got a refund will laugh at the person who owed, saying that they did their taxes wrong. But did he? At the end of the year, they both paid the same amount, and they both took home the same amount. Now, in my video 2 weeks ago, I said that you should ask yourself which one of these two people is the chump, which I got a little flack for. While they both paid the same and they both took home the same, there are two major differences that make me feel like the person who claims 0 is doing it wrong. Firstly, it's in the attitude. The person who gets the fat tax refund at the end of the year views it as some sort of extra paycheck or gift from the government, or that they're somehow sticking it to the man by getting their money back. That's obviously not the case. It's their money. It was always their money. So let's change the situation a bit. Instead of taxes, let's call it a bill, and instead of the government, let's say it's a cell phone company. They don't bill you until the end of the year, but you are required to make monthly payments, and they tell you that someone with your usage typically pays about $30 a month. You decide to play it safe though and give them $50 a month, while your friend only gives them $25 a month. At the end of the year, you get your usage details along with a $240 refund, and your friend owes an additional $60. In that case, you would seriously reconsider how much you're giving them each month and probably think that your friend is doing it better. But this is the exact scenario as it is with taxes. It's not some gift from the government. You're overpaying, and you're not sticking it to anyone. The second reason I feel that the person who is claiming 2 allowances is doing it better is because he's holding on to his own money throughout the year. Let's take a look at November. At this point in the year, he has more of his own money in his pocket to go Christmas shopping or traveling with. While this person has too much money sitting in the treasury. They'll get it back, but right now they don't have it. This is another misconception. It's not an interest-free loan to the government. You are giving that money to the government to hold on to until the end of the year, when they just give it back to you. But they don't really get to go out and spend that money, so it's not really a loan. It's basically just like burying it in your backyard and then going to dig it up at the end of the year. It's silly, and you could be doing any number of better things with that money. So on to the next question I received. When I talked about our progressive tax system, I mentioned that a regressive tax system would be the reverse and would wildly benefit the rich, and some people say a flat tax would too. And I didn't really explain why, I just kind of assumed. And we all know what happens when you assume. In our progressive tax system, the more money you make, the more that money is taxed. So if you average all of the tax brackets together, your effective tax rate is higher if you make more money. Let's revisit those two guys again, with the Enclave soldier making $125,000, breaking his money up into 4 tax brackets, 10, 15, 25, and 28%. And the poor Brotherhood of Steel soldier making $36,000, where his money only crosses 2 brackets, 10 and 15%. If you look at all of the money they owe across all tax brackets, their effective tax rates are 22.43% and 13.71%. The Enclave soldier owes $28,036.75, and the Brotherhood of Steel soldier owes $4,936.25. The rich guy pays about 10% more as a percentage, but still takes home significantly more. So now let's look at the reverse, a regressive tax system. This means that the lower tax brackets are taxed at a higher rate and they get smaller as you go up. Nobody uses this system, so there are no real-world examples to work with, so let's just make one up and see how it works. We'll keep the bracket sizes the same for simplicity's sake, and since the highest tax bracket in our previous example was 28%, let's also just use that as the first. Then 25%. The Brotherhood soldier's tax burden ends here, and he now owes $9,278.25. That's almost double what he owed under our progressive tax system. The Enclave soldier keeps going though, through the 25% bracket, the 15% bracket, and ending in the 10% bracket. Under this system, he only owes $21,100.75, only 75% of what he owed before. The real difference is shown when you look at their effective tax rates. The Enclave soldier's effective tax rate is now only 16.88%, and the Brotherhood soldier's is 25.77%. They've pretty much flipped positions, with the poorest paying more as a percentage. So okay, let's look at the flat tax, which has been rebranded as the fair tax, because that sounds nicer. The people who like to push this say that it's much simpler because the American tax system is so super complicated. No, it isn't. I explained it in 15 minutes in my last video, plus however long this video is. It's not that complicated. But they want you to think it's complicated so that you keep going to those special tax prep people, and whenever a politician talks about simplifying the tax code, you'll nod your head and agree. But anyway, conspiracies aside, why is a flat tax a bad idea? Everyone pays the same amount regardless of how much they make, so intuitively it sounds pretty fair, right? Well, let's take a look at it in practice. Under our current progressive tax system, off of these two people, the government makes $32,973. This shouldn't come as a surprise, but this is how the government pays for things, by collecting taxes. 47% of all government revenue comes from personal income tax. And since the government always operates on a deficit, cutting taxes means increasing the deficit. So if you want to use a flat tax while not losing any government revenue, your flat tax rate is going to have to be high enough to maintain the current level of revenue. How much would that have to be? About 20%. At a 20% rate, the Brotherhood soldier pays $7,200, and the Enclave soldier pays $25,000. The Brotherhood soldier pays slightly more, the Enclave soldier slightly less, and the government breaks even. So a realistic, sustainable flat tax harms poor people by increasing their effective tax rate, but helps rich people by lowering theirs. A few years ago, presidential candidate Herman Cain introduced his famous 999 tax plan, which would have created a flat 9% personal income tax, far lower than what would be required to sustain the budget, while also decreasing the corporate tax rate from 35% to 9% and introducing a new 9% national sales tax. He also wanted to eliminate the capital gains tax and the estate or death tax, which are taxes that only really affect the richest Americans. In that scenario, the Brotherhood of Steel soldier would see his effective tax rate drop by only 4%, and his sales tax would more than double. The Enclave soldier's sales tax would also double, but his income tax rate would be cut by more than half. And corporations who rarely pay sales tax would see their tax rate reduced to a quarter of what it is now. So who would that plan really have benefited? So the next time some slick politician talks about simplifying the tax code by introducing a ridiculously low flat tax, you'll know that that's not economically sustainable. Also ask your employer for a new W-4, because now you know better. Hey guys, if you enjoyed that video or you learned something, make sure to give that like button a click. If you'd like to see more from me, I put out new videos every Sunday, so make sure to withhold that subscribe button. This video was a response to your questions, so make sure to follow me on Facebook and Twitter, and join the conversation on the Reddit. But in the meantime, if you'd like to watch one of my older videos, how about this one?